Hello traders. Welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello, I'm Bill Duryea with Follow the Bots. Welcome to today's Daily Market Recap. A detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is July 8th, 2013. During the July 4th holiday, the S&P had pulled back and tested near-term support at 1594. The market rallied up off the low and closed the session at or near 1608. Following the release of the jobs report, which occurred on Friday, the S&P traded above the prior high at 1620 and auctioned up to a new high at or near 1630. After rallying up to 1630, the S&P pulled back and tested support at the prior close down at 1608. Having held support on the pullback, the market auctioned back up and retested the high into the close. At the open of Sunday's Globex session, the market rallied above the weekly close and traded up to a new high at or near 1639. At today's open, price made a modest pullback at or near the prior high, retested the high and made a slightly higher high, pulled back again to the opening range low, and closed the session up off the low at or near 1638. For those of you who had the opportunity to hear our Sunday broadcast, we expressed our concerns that the market may not pull back much below the 1628 price level. Indeed, at Sunday's open, that was the maximum pullback, and as we came into Monday's session, ahead of Alcoa's earning announcement, which occurred at the close, price failed to pull down even to the prior high and held support in a very narrow trading range between 1639 and 1632. We often receive emails from our members asking us to explain how we determine support and resistance levels. In one of the classic books on technical analysis, written by Richard Schabacker, Technical Analysis and Stock Market Profits, Schabacker defines support as follows: that price level wherein there exists demand sufficient in quantity to halt a downward movement in price and result in the price path changing direction. If you look at the charts that we post in our daily commentary as well as on our website, we endeavor to be explicit as possible as indicating where support and resistance can be seen in the market structure. For example, the initial rally up to 1630 ended with the market pulling back down off of the high, the price path reversed direction, and the S&P traded down to 1608. Thus, the inference we draw is that at the various levels where price failed to auction higher, the market encountered supply, selling pressure, and/or a lack of buying interest. The end result of the lack of buying interest and/or selling pressure resulted in a change in the path that the market was following up until that point in time. During the pullback down to 1608, you can see that demand entered the market, the selling pressure ended, price upticked off the low, retraced back up to the minor resistance level where the price action paused and pulled back down to 1616. There, the selling pressure once again ended, and the market auctioned above the minor high and traded back up to the prior high at 1630 before pulling back to 1626. Selling pressure ended during the pullback to 1626. Buying initiated. Price auctioned back up to the high, pulled back modestly to 1632, auctioned back to the high, wherein the market encountered selling pressure, resulting in price pulling back and retesting the minor opening range low. This is the market structure method for determining support and resistance. The significance and/or magnitude of the support and resistance levels have a direct correlation to the degree in which the price path altered direction. In other words, minor support would be the categorization of the pullback to 1632. The next support level would be down at 1628. The maximum or near-term support level would be located down at 1608. In determining how the market will react during pullbacks and retracements, we have developed a series of algorithms that assist the trader in reading the order flow sequence. For example, during the retracement to the overnight high, our algorithms detected that buy programs were waning. In other words, there was a lack of buying interest when price auctioned back up to retest the high. And then a series of high-frequency initiated selling occurred, and eventually that led to the market pulling back off of the high and auctioning back down to the opening range low. Alternatively, when the S&P pulled back to retest the opening range low at or near 1632, 1631 half, our algorithms detected that sell programs were waning. In other words, the selling programs that drove the market down to retest the low ceased to dominate the execution sequence, and the market upticked off the low and eventually traded back up to 1606. There was a lack of buying interest late in the day, and price pulled back down again to 1602. So here we have an indication with the symbol BPW that buy programs were waning, indicating a lack of buying interest. And on the minor pullback, we have the indication indicated here, SPW, sell programs waning during the pullback, followed by high-frequency initiated buying, which resulted in the market auctioning back up off the low and trading back up to the 1635 price level at the close. That concludes our daily commentary on the S&P 500 E-mini. If you're interested in following our real-time commentary, we invite you to visit us on the web at www.followthebots.com.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.